The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OX-Radio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners out there are faring well and surviving and indeed profiting in these tumultuous times that we're living in these days. My name is Mark Longo from the OptionsInsider.com as well as the Options Insider Radio Network, and I am joined in today's cavalcade of stars by some rotating faces. All of them actually have been on the show before, so they won't be new to you listeners. Some of them has been a little while since they've been on, and we'll start off with, I think, the person who's been the longest since he's been on the show. It is good old Andrew Giovanazzi from Acumen. Andrew, welcome back to the program.
Thank you, Mark. Thank you. I'm very happy to be back for Acumen.
And remind me again, where are you recording from? Where is your HQ and or Acumen HQ?
The Acumen HQ is actually in Houston, but I am our sole East Coast representative. So I'm actually based out of Maine, and I do most of my travel into New York, Boston, and Chicago.
Oh, so you were just far enough north to escape the bulk of the ravages of Irene there.
We just got good waves. That's all we got out of that storm, which was good.
The bulk of my family is back in Connecticut, actually. But I think most of them survived with just a little bit of lost power, but not much else in terms of damage. So it wasn't too bad. Just a lot of rain, it seems like, and some mild winds. And we are also joined in the rotating Options Express hot seat by last episode's guest star spectacular / extraordinaire, good old Alex Jacobson. Alex, welcome back to the show, sir.
Hey, Mark, thanks. Doing the show the other day was fun. Now there's going to be a brawl here at Options Express for who's going to want to do the show going forward.
We'll need to set up multiple accounts over there so we can have multiple people chiming in at once.
Yeah, well, I have an advantage. I weigh more than anybody here, so I sort of carry the weight.
Literally and figuratively, sir. And there might be some fun things to discuss about OX, because I hear a little birdie has told me that there are indeed some developments going on over there to discuss today in the old Xpress Block.
Yeah, today is what's called Legal Day 1 of the combined entity of Charles Schwab and Options Express. And, up until now, we couldn't really talk about it, but we're legal as of today, and we're excited about it. In fact, right outside the door where we're doing our broadcast is a large cocktail celebration about to start. So if we face some technical difficulties, you'll know it's just us going to the cocktail
If you start
party,
slurring your words about halfway through the show, I'll know what you've been up to in your downtime there.
Yeah, exactly.
Maybe Mike and I and the rest of us will have to pour some cocktails as well so we can keep up with you and give the show a nice lively feel today.
Yeah, by all means.
And then last but not least, we are joined by the old man from the mountains himself, good old Uncle Mike Tosaw from Know Your Options Inc. It's been a while, Uncle Mike. How are you faring out there in the St. Charles office?
Doing well, doing well. It's exciting to be back on the show as per usual, and excited about the big merger too. Alex, you got to tell Joe and Nina and my old gang to get back to work. They shouldn't be drinking the cocktails this early like they probably are.
Yeah, that affects you guys too, as of course you guys have your affiliations with the Brokers Express arm, so you are all being wrapped into the quote-unquote Borg collective that is the Schwab OX entity now going forward. So
yeah, that's it. It's after 3:15. An adult beverage is allowed after 3:15.
Yeah, after the market closes, an adult beverage or two is indeed required.
SPX is still open for another couple minutes, so...
All right. And
1 minute.
There we go.
And with the team assembled, we will dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is indeed the portion of the program where we discuss what was moving the markets, what was lighting up the tape today from a broad market perspective, and it was indeed another one of those mild yo-yo days in the market today. We started off a little bit to the north, a little bit to the upside, given some relatively strong manufacturing news, and that seemed to buoy the market for a little bit going into the early part of the session, but it wasn't enough to keep us to the upside all day. We indeed closed down today. The S&P closed down 14.5 handles to 1204.5 roughly. The Dow closed down about 120 to 11,493. The NASDAQ closed down 33.5 handles to 25.46, and the good old VIX cash, which has been just an interesting beast to watch this week, closed up 0.2 to 31.82. So I guess we'll start there. I know we kind of, with the VIX and the VIX cash, I know we discussed a little bit on the previous show about, it'll be interesting to watch this week. Going into a long weekend, I know, traders tend to like to take that weekend out early whenever possible. So it's going to be fun to watch how that weekend coming out interacted with the VIX and how it took some levels off the VIX, as well as if traders would keep their powder dry going into tomorrow, because with the non-farms on Friday going into a long weekend, I think a lot of people would want to wait till that number came out before they really took the bulk of the weekend out. So unlike in previous weeks where we would have seen most of the weekend out already by now, it's looking like the weekend is still in effect, and we haven't really seen VIX come off maybe as commensurately as some people thought they were going to see going into the tail end of the week here. Andrew, is that what you guys are seeing as well over in the land of acumen?
In the 3D space, yeah, there wasn't just a whole lot of stocks with volatility coming in today. That's, except obviously Sienna, big move up or whatever. But for the most part, the volatility moves are kind of muted. So I didn't see much come in of note as the market would have, as I would have expected. So.
Yeah, I mean, same thing here. I mean, you just didn't see a lot till the end. You had the ISM numbers this morning, and they were okay. There was an opportunity to spin them a lot of different ways, but they weren't really good and they weren't really bad. You had car sale numbers that were good today. The only real big news today, big news came in right at the end relating to Larry Ellison getting his lawsuit overturned. But we sold off on light volume. When I was a broker, when I did high net worth, selling off on light volume, you'd say to a customer, that's like going up, and it was just a low volume, very uneventful, not a lot of news today.
Yeah, not a lot of news. When we saw, obviously this morning, what we saw with the manufacturing numbers, that was probably the biggest news of the day. And of course, there was some action on some other fronts as well. I know Uncle Mike, jokes aside, you are always one to dive into the natural gas realm whenever possible, and we saw a little bit of action out there today. Is that what was taking up the bulk of your time? Oh, before we even do that, it's been a while since you've been on the show. What was the old BBI today? Our listeners are dying to know.
Well, I have to tell you what, though, the BBI was fine today, so I didn't have to get up too much. But I will say a couple of weeks ago when gold was going down, the old BBI was struggling a little bit, but we adjusted our collars and it worked out pretty well on it.
So you did roll down then?
Yeah, we actually, when GLD went down to, I believe it was the 172 level, and I have to check my notes to see the exact levels. We have been, for those of you that haven't been listening, We have been doing just long puts for our gold positions for probably since the beginning of July. We normally the collar is our traditional objective, our traditional strategy with gold, but then we just made a decision in early July with spot gold going up $20 a day frequently. We were just going to not throw our hands up in the air and say, okay, we're just going to buy puts for the time being and manage our risk accordingly. The other day, we actually, or probably about a week ago, we rolled down the put when GLD pulled back, and then we traded into a collar. So we are back to collaring in the world of GLD.
Oh, so now you're back to your roots, as it were. I'm sure you felt a little naked without that collar end to the upside there.
It was kind of a weird thing. It's like, but when gold's going up that much, we missed a decent chunk of the silver rally for the same reasons, and we didn't want to do the same thing again with gold.
So is this the KYO way of saying that you feel the at least the short-term froth, the upside is at an end in gold? I mean, you might still keep running up, but maybe not as frenetically as we have been over the past month or two?
I think so, yeah. I think it's one, like the word, if you look on the internet of anyone talking about gold, you'll see the word parabolic by pretty much anyone's take on gold. So, yeah, with that, I think that I'm still a long-term bull on it, but in the short term, I think I feel justified in putting covered calls on it again.
Now, it's been a while since I looked at the upside skew in the GLD and SLV. I know we've seen some severe panics to that skew in the past. Now that you're putting on your covered calls again, are you still getting relatively high, relatively juicy levels for those covered calls, or has the skew come in a little bit to the upside?
It's still good, but it's not like what it was. We did the covered call last week is when we put the collar back on, and it's good. It's still good, but it's not quite like it was. It's nothing like what silver was when silver was trading at 40 originally, and you could get pretty decent premium for 55 covered calls 1 month out, I believe.
Yeah, I think you could sell the 60s for absurd levels. At front month 60s, if I recall correctly, back in the middle of that silver panic / bubble / whatever you want to call that. Those were good times to be selling upside skew in SLV. I didn't mean to derail you with the metals. I know nat gas is your big focus today, and bodily needs aside, what was going on with your nat gas today, sir?
Yeah, I'm so glad Sebastian's not here right now. But
yeah, hey, I'm trying to take his place whenever possible.
All right, so we need to we got the mini metals out of the way, got the bodily fluid jokes out of the way. All right, I think we're ready to go now. Yeah, just looking at natural gas, there was an inventory report. There was less than expected inventory. So yesterday, nat gas, the futures just had a pretty decent day. But today, a lot of natural gas-based stocks, or just over the last couple days, actually, we've been rallying a little bit. You look at my beloved Chesapeake Energy. We're up over 2% on Chesapeake Energy today. Chevron pulled back a little bit today, but for a while, Chevron was actually over 100. And just in general, a lot of natural gas stocks were up on the day just due to a lesser inventory. I shouldn't say a good portion of them relative to the market going down 100 points like it has in the Dow.
Are you still collared in those nat gas stocks as well, or are you letting them the dice fly high in those as well, like you did with the metals?
Well, we're with a lot of the nat gas stocks, or we are collared in some of them, but in Chesapeake Energy, one thing that we found probably about 6 months ago that we've been doing in a lot of natural gas stocks was the premium was set up in such a way to where we could sell front month short puts and out of the money, and then what we were able to do with that is we could use the premium from the front month short puts to buy longer term out of the money bull call spreads. And we've been doing that for quite a while now, for probably about 6 months or so. And we've just been building into a position on Chesapeake Energy and Chevron. Those are the two that it's been working pretty well on. And a lot of reason there is a dividend on Chevron, so I understand that you're going to get that. So we do get that. Or we do understand that, but that's one where the benefit of it isn't so much, we're not looking for an option skew per se. We're just looking to have a good chunk of upside, which we do through the bull call spread, but have a cushion to the downside. Like right now, for example, we're essentially short 27 puts for Chesapeake, the 29 puts for Chesapeake. Obviously we have a lot of different clients, so different people are going to be at different levels. And for Chevron, we're short the 90 puts for September. So that's our downside risk right now. We have upside bull call spreads on it as well. For the most part, the combination has been what we've been clinging to a lot. This as safe as possible of a combination is what we've been clinging to in the natural gas stocks.
I just have one quick question. Is there a technical term for that funky risk reversal you have on with the call spread versus the short put? Have you guys come up with a name for that trade? Which actually I like the trade conceptually. Those are great ways.
One of our clever option block names. I don't think we've done that one yet.
I don't know. We need to do it. For those of you viewers out there, let's do this. Send in a name for it's the combo trade. I don't even know what to call it. So why don't we do this for our listeners out there? We're shorting a front month out of the money put and using the premium to buy a longer term out of the money bull call spread. So we need a name for that. So listeners, please send in some ideas.
Yeah, just another thing on nat gas too, with the SEC now coming into regulating, I don't know if you guys have hit this on a previous show, but deciding they have to look at fracking. I guess that must be the new flavor of the month for our regulators. Maybe people possibly piling in a little bit to nat gas again now that the regulation picture might slow things down, maybe a little less production. And then you see some dollars jumping in again ahead of regulation. So I did notice that a little bit after I saw that news reported.
It's funny, you can't mention fracking these days without me having a flashback to Battlestar Galactica. It just doesn't sound like it sounds like too much of a sci-fi term but to be in such popular usage these days.
Frack this.
Well, it's that you guys may have discussed this, as Andrew pointed out. It's that, the story fact, NPR did a show on it, that they found this gas field under Pennsylvania, New Jersey, New York, that is expected to be the largest gas field. Have you guys talked about this yet, or has it been a topic on a?
No, we have not talked about that yet.
Yeah, well, but they have two rival professors, and don't hold me to the schools. I think the guy who thought it was a huge opportunity was at one of the campuses of the University of Pennsylvania, and he said what you basically found here is the next Saudi Arabia of natural gas, and there's enough gas.
Alex, did we lose you?
We might have lost him, but there is enough gas. I think is that the Marcellus Shale he's talking about? That's
yeah, I believe
right.
So.
I think Chesapeake has a little chunk of that.
Yes, they do.
There is a ton of that gas laying around over there, and now everybody's gonna try to regulate the heck out of it.
I dropped out briefly. I apologize.
The Wi-Fi gods seem not to like OX these days. Tim, John, all you guys they drop out all the time on the show lately.
Actually, we were trying to connect another user here, and it's our fault, so I apologize for that.
No problem. We're about to dive into the old odd block unless you have anything less you want to say on the shale. I think you got cut off mid-sentence.
Yeah,
actually.
Well, long and short of it, it's the biggest gas find in the world. They're not sure if they can get it out without destroying the environment, but it's I remember the value.
Those pesky concerns,
Yeah, northern, folks in New Jersey, Pennsylvania, do they really need to be able to drink the water?
I mean, come on, it's New Jersey. I think they're used to that by now.
What do you need the water for when you have Rolling Rock?
Exactly, old Latrobe.
It's their way of getting along water companies then.
Exactly. Okay, so what are the water stocks? I got to start finding those now.
There's a play.
All right, and now that we've offended all of our listeners from New Jersey, we're going to close out the trading block and roll right into the odd block.
The odd block.
All right, and welcome to the odd block. This is indeed the portion of the show where we discuss the interesting and or the unusual options activity that we saw lighting up the tape today, and we're going to kick things off with Dunkin Brands DNKN. This is a new name just recently listed over about a month ago, and I think that came as a surprise to a lot of us when we heard they hadn't been listed. They hadn't gone public until recently. I think a lot of us just assumed that Dunkin has been trading forever, and a lot of us remember the big uproar around the Krispy Kreme IPO about 10 years ago or so. So we assumed, I think, that Dunkin' Donuts had followed suit long ago, but that's not the case. They went public last month, And now tomorrow, analysts are going to initiate their coverage on this name, so everyone is diving in ahead of that day tomorrow. And we'll leave aside our opinions of analysts on this show for now. Instead, just talk about the activity we're seeing here in Dunkin. Of course, if you haven't been following this name, it IPO'd around the $30 level and traded around there. Got up to 32 briefly a day or two after that, and it's been pretty much below 30 ever since in this name. I believe the low is about $25 in this name. They closed today at $26.89, up about 55 cents. And what we saw going into this big analyst initiation of coverage tomorrow was a lot of flurry, actually, of upside call buying in this name. I mean, Dunkin has not exactly been lighting up the tape. They do about 122 contracts a day. They did 4,500 today, so a substantial day for Dunkin' Donuts. What we saw is more than over 1,000 of the SEP 30s seem to be the drug of choice today. About nearly 3,000 went up on the day, about 2,700 of them. The bulk of them buys, many of them in about the 35, 36 cents range. So a lot of relatively near-term bulls, these are front-month contracts, thinking that in this post-analyst coverage world, Dunkin' will once again rally back to its IPO levels of around 30. They need this stock to jump up about 13% for these calls to start looking good. We also saw some even more a little bit longer term bulls piling out to the OX-30 calls, picking up about 300, almost 400 of those out there for prices around $1 or so. So net, we saw quite a bit of bullish activity. Also saw some put sellers, about 350 or so of the SEP 25 puts went up today in the 60, 65 cent range, bulk of those sales. So primarily the bulk of the activity was bullish. A lot of optimists thinking that the good times are ahead for Dunkin' Brands. Any of you guys have been watching this name post-IPO?
Yeah, just a little tiny bit. Watching mostly just, I see this thing is just suffering from illiquidity. There just hasn't been a lot of trade in here. They come in and start buying probably one of the most gamma-sensitive calls, if we're going to use a Greek word, if I'm allowed, in the 30 level.
The more Greek, the better on this show.
The more Greek. So you've got definitely the explosion going on here in September, and started driving the volatility up. So it doesn't really have much of a history yet. So it's kind of tough to trade these things, and probably why the volatility was up, 10 or 11 points today.
Yeah, all that call buying really drove up the vol. And I think a lot of us who look at Dunkin', it's kind of hard not to think back to just like I said, the flurry of excitement around the Krispy Kreme IPO. I was still on the floor when that one went public, and they came down to the floor and handed out donuts, which I thought was a good touch on their part.
And it was a great short squeeze.
It was. It
was like the only stock that was going up in 2002 or 2003.
Exactly. In the post-bubble apocalypse of the market, and the post 9/11 apocalypse of the market, donuts were the one safe haven for your dollar. And then, of course, Atkins came along and kind of cut it off at the knees. It's done a little bit better, I think, over the past year or so, but by and large, I think the Atkins craze really made a lot of people skittish around these kinds of names. We'll see if Dunkin' Brands can escape the fate of Krispy Kreme going forward.
Yeah, they have those breakfast sandwiches.
Oh, that's true. They diversified. And, of course, people go there for their coffee a lot, too. They're kind of like some of the connoisseurs prefer that to Starbucks. I'm not a coffee man myself, so I don't know.
Remember, they put one right across the street from the SIBO. There was Krispy Kreme's right in the Insurance Exchange building there for, I don't know, however long the lease was, but it was gone within a couple of years. And for the first few weeks that they were open, I mean, it was, the way all Krispy Kremes were, it was like Coors beer, when you couldn't get it east of the Rockies. You'd buy it at the Denver airport and drag it home. And then all of a sudden, when you could get Coors beer, at the Binny's in Chicago, nobody wanted it anymore. And it was kind of the same effect. They had one right across the street from the SIBO. I know they had one out by the Rosemont. And, whatever the leases were, when the leases were up, they were gone. They just never really got a foothold here.
Yeah, I think that was part of their problem. They followed the Starbucks model and put a Krispy Kreme on every street corner, and I think the need for donuts was maybe not as strong and as widespread as they assumed. All right, next up in the odd block, we have American Express Company, ticker symbol AXP. They closed today at 49.5, down 21 cents. And this is a name that does around about 19,000 contracts a day. They did about 24,000 today, so not a super high volume day or unusual volume day for them, but there was some interesting trading in that. We saw a lot of bulls flocking into AXP today as well, particularly on the SEP 52 half strike. We saw a previous open interest of about 2011 contracts on that strike. We saw over 7,000 of those calls going up today. The bulk of them were buys around the 25 cent level or so on those. So a sizable number of opening buys coming in to American Express. This stock hasn't really traded at these levels till about a month ago, and then it's kind of took a bit of a pounding of late. It hit a 6-month low actually back a few weeks ago, 42. So the stock's been on a bit of a rebound since then. I think these traders obviously looking at this name and thinking that there is some substantial upside still to go here in AXP. The rest of the trading was relatively across the board. We saw some activity in the OX-50s as well, but the sizable prints were going up in the SEP 52 halves for 25 cents. I know, Tosaw, you're somewhat active in the financials every now and then. Are you playing at all in American Express?
I am not. I'm more broad-based in the financials. Definitely, over the long term, I'm definitely a bull in the financials, but keeping it broad-based because you never know when you're going to get another Bank of America.
Well, their chairman was on CNBC this morning on the block with the folks from PIMCO and one other economist. The outlook he painted was favorable, which may have been the catalyst to some of this activity.
There you go. Hopefully, if some large fund manager out there is picking up 7,000 calls because of what he sees on CNBC, then I think there are more inherent issues with the management of that fund than we can get into in this program. But nonetheless, maybe the positive chord that CEO struck was enough to drive this activity. Next up in the odd block, we have Lexmark, ticker symbol LXK. And these guys make the printers and all those other fun things that we see in Best Buy when we roll in there. We saw a lot of bears coming into Lexmark today. This is a name that does about 2,800 contracts a day. They did nearly 9,000 today, and the bulk of these were in the October 32 puts. We saw nearly 7,000 of these going up today with a previous open interest of just a couple hundred contracts. This is all opening paper, and these were these were all put buys for the most part. So either this is someone looking for a relatively near-term hedge for a substantial underlying position, or this guy is speccing ahead of some downside in Lexmark. These are not an earnings play because these options actually expire a week before Lexmark's earnings. So you'd think if he wanted to hedge his underlying, he might hold it for one more month going through earnings. But nonetheless, this is a substantial long put play here coming up in Lexmark. We don't talk about the printers that often. Maybe given all the trouble they've been seeing in HP lately, maybe this guy thinks something's going to follow suit here, and Lexmark's going to have similar problems. It hit a 52-week low of 26.5 roughly back in June. It's up about 20% since then. This guy could just be betting that that's a dead cat bounce in this name, and the name's going to retreat back to the 26 level. But regardless, a lot of bearish opening activity in Lexmark. All right, and that's going to do it for the old odd block. And now we're going to roll right into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OX Radio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express Block. This is indeed the portion of the show where the boys from Options Express take over and I get to sit back and rest my vocal cords. And Alex, as I said at the top of the show, a little birdie told me that there are indeed some large, significant dealings going on over at OX today. It is indeed the day when the Borg Collective has been formed. So give us the inside look on what's been going on at OX today, aside from the drinking and the partying, of course.
Well, there is a hell of a party going on right outside our door. Jimmy and I are sitting here reevaluating our careers. But today was the first day that the Schwab Options Express business combination became legal. It's actually called Legal Day 1 here. And it's, very, very exciting. It's there's still a lot, kind of to be determined about, what platforms and how long things will take. But the reality here is Schwab wanted the option DNA, the derivative DNA, the futures, the foreign exchange expertise that we brought to the table. We always had a leadership role in the option market. Schwab has enormous scale. We have $7 billion under management here at Options Express. Schwab has in excess of $1 trillion. And one of the exciting opportunities is just the scale, the expectation that eventually we'll be exposing a much larger dollar base to what they can do with derivatives, what they can do to hedge, what they can do in this zero yield environment. So it's a real interesting time. There's another side to this too, that there are lots of businesses that we at our scale weren't in, the 401k business, the bank business. So there are going to be lots of new products available to our clientele here. Candidly, we always knew that our clientele did some of their products away from us because it just wasn't a strength area for us. And we're excited about the fact now that we'll have the big retirement business, the big RIA business. We have an RIA business here, but it's dwarfed in size by what Schwab has, and the bank itself, which really adds a competitive edge. And I don't know if any of the noise is sort of leaking over the mic, but we're celebrating now. We all got new job titles. We got an org chart today, and it's an interesting time. From a purely competitive standpoint, it gives us the scale that puts us in a number one position back in the industry. When I left the SIBO in 2000, Schwab was about 9 or 10% of the daily volume in options, and if you look at what happened in the decade plus since then, is firms like us, firms like Options Express, took that option-centric customer away from them. And now you've got the two combined entities, and we're going to deliver a combined product for both the option-centric customer and the more traditional customer that will be unrivaled.
Yeah, it sounds like I can hear Pete Bottini whooping drunkenly there in the background. Has it progressed to the shirtless dancing phase yet, or is that to come in the Options Express party time?
I didn't think there was a camera on this computer, so
I can just sense it.
No, everybody is celebrating in a very dignified fashion, and we're excited about it. It's the scale is. I mean, as someone who kind of does what I do for a living, when I was at the SIBO, we were a 70 share, and a dominant player, and then you saw the market fragment. We're back now where we have the scale and the tools to really be a very dominant player in the industry as a whole. The niche here at Options Express was the option-centric customer, and we do a great job of supporting that customer. That base has widened in the last year or so with futures and futures options. I talked about this on the last show when I came here. I was stunned at the amount of business that's being done in futures and futures options, but there's no reason to be stunned. There's a robust, sophisticated electronic platform. These products are now easy to trade electronically. They're inexpensive to trade. And the more trading that goes on, the better the markets get. Futures options have always kind of been notorious for kind of a lack of market quality, sometimes even parity. And now that you're getting robust paper moving in and out of those, it's really becoming a mainstream product. And it's a really exciting time.
Yeah, you said you got the org chart now. Does it delineate? Is it still, does Options Express as a brand, is that still going to remain going forward? Are they going to make it, Schwab Options or anything crazy like that? Have they announced any plans along those lines?
No, the brand remains. It's Options Express as the brand remains. On our side, nothing changes here. Platform doesn't change. Nothing changes here. It's just part of the Schwab brand. And in fact, we're updating our logos today. The Options Express brand is there, will be there, and will always be there.
I think that will be reassuring to a lot of our listeners who saw the way that maybe a few of your competitors have handled their integrations of options brands when they acquired them, and let's say it hasn't gone especially smoothly. So I think there's a lot of concern that some of that might happen at your end as well. So it's good to hear that the plans are not the same over there.
Well, that's a business opportunity for us, candidly, seeing the other centric firms kind of lose their DNA in the acquisitions. I mean, the option business changed in 2000 with the advent of the ISE and competitive listing and electronic trading, and volume went from a couple million shares to peak days. We've hit 30 million shares on peak days. You would never have had that in the distribution system you had in 1999 or 2000. But the opportunity is boundless. I mean, people who listen to your show, people who do business with us here, we're option enthusiasts, and we think a lot of the world is like that, and it isn't. It's still a fraction of the investing community, and you look at countries that didn't have option markets, and their stock exchanges would trade 30 million shares a day, and 2 years after they start an option market or derivative markets in general, their stock exchanges trading 30 times the volume it was prior, because people can risk manage, portfolio managers can hedge. So the scale is interesting, and we're really excited about it. I mean, as again, someone who's been around a lot, making a career choice a few months back of places, you want to go somewhere where the DNA is strong. And I know it sounds corny, and I know it's kind of a cliche phrase, but the DNA that runs through this shop is derivatives. And that's why they bought us.
I thought it was interesting when I talked to the Schwab guys down at OIC a few months ago. We were talking about the acquisition and the value it could have, and we talked about it on a number of different levels. And one of the key ones they even said, which is what you alluded to as well, is they have those core businesses, the bank businesses, the advisor business that they have over there, and they could just introduce derivatives to more of that audience and grow and help the OX brand kind of expand their reach internally with derivatives. It would be additive to them, because they could just grow. If they can just grow a few percent more of their customers can start using derivatives on a regular basis, it would be a hugely enormous additive thing for them. So that, in that sense alone, just internally, it makes a lot of sense, let alone, helping to refocus the Schwab brand back towards options. Because you're right, back when I was on the SIBO, Schwab was a big player in options, and they kind of lost that focus, and coming back into it again this way, I think will be a good thing for them down the road.
Yeah, no, it's small increases on a base that size. Right now, the option business done here at Options Express is about the same with $7 billion in assets as is done at Schwab with, I think it's $1.3 trillion in assets. And, a moderate increase. If you say to yourself, you just get a little bit here and a little bit there, and that can easily, the incremental business can be as large as either one of us are now. So, and that's what we're shooting for, and that was everybody's plan in this. And the Schwab folks have been incredible, interesting. I mean, one of the guys who's running the deal, who's now kind of the de facto business head, is a guy by the name of Andy Gill at Schwab, and I had done seminars with Andy and presentations with Andy over my long career at the exchanges, and he didn't know I was here. And I came in the morning that they announced the merger, and our eyes kind of met across the room. And I don't want to make that sound wrong, but all of a sudden
it was a very romantic moment indeed.
I'm hearing summer wind in the background all of a sudden.
Yeah. So no, it's an amazing opportunity, and it's not a cliche to say we're excited about it. Going from $7 billion to $1.3 trillion, if 50% of the 90% of those assets are unreachable, and 10% of them are. It's a huge opportunity. And it's not just an opportunity for us and Schwab. It's not just an opportunity for the combined company, but it's an opportunity for the industry. I mean, think about ETF creation, think about structured product creation, think about the base of 401ks and IRAs that'll now get the ability to do things that you can do at Options Express, risk-based margining. After the deal was announced, you'd be out at presentations and people would come up to you and say, well, could you explain to the folks at Schwab that it's okay to, sell cash secured puts or to sell, put spreads in an IRA? They don't seem to get it. It's not that they didn't get it. I mean, the Schwab people are very smart people, and I think a lot of times customers have the assumption that when there's a restriction, they don't get it. It's just the fact that they look at business decisions at a company that size and say, what percentage of our clientele is going to want to do that? Schwab's clientele does still not have access to risk-based margining, whereas risk-based margining is kind of a mainstay here at Options Express. Portfolio margining, just the ability to get portfolio margining into the Schwab system should be accretive immediately. I mean, immediately. The first day those clients can see that, the first day those clients understand it, the first day those clients get the email that says, you're now suitable for portfolio margining. I mean, that alone is going to raise the water level for us and the entire industry.
It'll be a watershed moment for many of those Schwab clients who will have their eyes opened to the potential of derivatives. An exciting time, I think, for all you guys over at OX. And that is going to do it for the Express Block. And now we're going to roll right into the Strategy Block.
The Strategy Block.
And welcome to the Strategy Block. This is, of course, the portion of the show where the man from the mountains steps down from the mountains and seizes his salmon fishing and whatever else you guys are doing up there in those mountains in St. Charles. And he steps down from the mountain to dispense some wisdom and indeed perhaps a strategy or two. And Uncle Mike, a little birdie, my little birdie spies are quite accurate these days. And a little birdie told me that you've been pondering and pontificating in the world of the old ratio 1/2, perhaps your favorite strategy of all time.
Don't know if it's my favorite.
Well, next
of
to
all
the
time.
stupid, of
It's
course. Next to
definitely
the stupid.
Right. Yeah. The call's stupid. How can you beat that? Right. But yeah, right now we're in a market where we've pulled back a little bit in the month of August. And for a lot of our clients, they're just like our tagline that we've said from the get-go at Know Your Options, we're long-term bullish, short-term cautious. And there's a lot of stocks, there's a lot of stocks out there that are down in value over the course of the last month. So let's say you own a stock and you're bullish on it for the longer term, but it's depreciated a little bit in the shorter term. And it might come back a little bit, you think, but you want a little bit more bang for your buck than a covered call, just because you don't think it's wise to necessarily sell a covered call on a stock that's just gone down. So what we like to do is a variety of 1x2s. And the first one, it's fairly simple. Let's say XYZ stock started at 60 and the market went against you. It's down at 50 right now. Well, if that's the case, one thing that you can do, you can buy an additional amount of shares at the 50 level. Let's say you had 100 shares, you can buy another 100 shares, and then you've lowered your cost basis to $55. That's one way with which you can go about doing it. But another way that we like to kind of create leverage is through a 1x2 ratio spread. So the vertical 1x2 ratio spread is as follows. The stock goes from 60 to 50. We're still bullish on the stock. What we can do is we can sell to, now remember, we own 100 shares now. We're going to sell 2 55 calls. Now, with that, you're thinking, okay, well, wait a second. I'm making a call when I do that if I only own 100 shares, and you're absolutely right. So what we then do to combat the nakedness, so to speak, is we'll buy 1 50 call. So what we're trying to do is use the premium that we take in from the 255 calls and put that money to use in buying a 50 call. Now, a lot of times when we do these, it comes out to close to an even money trade, but I've done these for debits. I've done them for credits. That's not so much the issue. We want them to be around an even money trade typically. So if you hold this stock until expiration, and sometimes you don't get to do this in the front month. Sometimes you have to go 2, 3, 4 months out to actually get something that resembles that of an even money trade. But if you hold on to this trade until expiration, you have double leverage from 50 to 55. It's like owning twice as many shares. Reason being, you have that call option that was financed by the premium taken in from the short calls. So if the stock goes from 50 to 55, you'll make money on the stock, but then you'll also make money on that call option that you bought. So if God were to tell me the stock was going to go from 50 to 55, then this is a pretty good trade. It's hard to argue with this trade. Now, unfortunately, God doesn't give me trading tips from at least directly.
That was your other KYO tagline. We trade with God, KYO.
Yeah. Well, true story. I sent out an email one time giving an email update to what I was doing, and I said, GLD just gave us an opportunity. And so someone wrote back, and she said, I thought at first when I read that, I thought you said God just gave us an opportunity to roll up the put, and I was really scared. But
she was about to yank all of her funds.
Yeah, she had to read that one a couple times. But with anything, you have to assume the worst with any trade. You have to be risk-based when you trade and assuming that what can go wrong. Well, the stock can continue to go down. And if the stock continues to go down, you do not have any protection on this. You're going to go down with it if you continue to hold the stock. Now, if you're long-term bullish on the stock, you're willing to ride it out, that's fine. The other bad thing that can happen, if that stock goes from 50 to 90 over that time frame, you do not get to participate on it. If you've ever felt the frustration of being in a covered call, having the stock going through your short call, then plan on having that same frustration with this trade if the stock goes up too high, too quickly. So benefit, free upside from 50 to 55, assuming you hold the trade until expiration, no additional risk from a monetary standpoint. Disadvantage, you're limiting your upside. So if you're looking to do a stock repair strategy, this is something with which to consider. And folks, there's no law that says you have to wait till a stock's down in value to do this. Oftentimes I'll put this on a stock that I just bought. I wouldn't have a problem with doing that. The sentiment needs to be that you believe the stock's going to go from 50 to about the 55 level between now and expiration. Now, the other things that we do, and we're not going to get into it today, maybe on a future show, we do 1x2 calendars as well, and I'm actually in one right now, but we're going to save that for another show. Tune in next week.
Same bat time, same bat channel for that one, and thank you, Uncle Mike, for diving once again into the world of the ratio 1x2 spread, because I know that is such a fan favorite of yours over at KYO. And that's going to do it for the strategy block. And now we're going to roll right into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is indeed the portion of the show where we discuss what's coming up on our horizons, on our crystal balls for the next few sessions. And as we discussed at the top of the show, everyone's pretty much keeping their powder dry ahead of the non-farms tomorrow. Traditionally, going into a long weekend like this, we should have seen a lot more vol, a lot more time decay come out of the market. We should have seen the VIX come off with that decay. And it's always fun to me to turn on CNBC ahead of a long weekend and seeing the commentators there, the talking heads, prognosticating about how the VIX is selling off when it's really just the decay coming out ahead of a long weekend. But we'll leave that as it may. CNBC bashing aside, it is interesting to watch watch how that hasn't happened yet this week because everyone wants to indeed keep their powder dry ahead of that big number. And Alex, I know on the last show you counseled that it might indeed be a good time to get long some premium given all the vacillations and dramatic movements we've been seeing in the market. And maybe tomorrow it's not a bad time to do that. It's up to you whether you want to wait for the number and pick up your premium ahead of the number, knowing that if the number is not any sort of significant number, all of that weekend is going to come out immediately afterwards. Or if you wait until after the number, if the movement isn't that dramatic, then you can indeed pretty much get a free long weekend out of all that because that decay is going to come out like a storm right after the non-farms. And oftentimes they will overdo it in their haste to take out the weekend's worth of decay. And you can indeed get a free weekend and maybe a free into early next week. And given all we've seen of the immediate and aftermarket announcements, the downgrade, the Steve Jobs stepping down, Google buying Motorola, what have you, there's been a lot of literal weekend risk and a lot of after-hours activity in the market of late. So it may not be a bad time to take advantage of that and prep yourself and pick up some bullets or some units for the crazy markets that we're in these days. But Uncle Mike, what are you watching these days over at Know Your Options aside from nat gas and your continual obsession with the mini metals?
All right. So what we're watching right now, the 1225 level on the S&P looks like that was a form of resistance. 1200 is a key number. So just from a number standpoint, that's probably the main thing that we're watching right now, aside from the non-farm and the announcements coming out tomorrow.
Are you prepping? Are you picking up more downside for your clients here, thinking that we're going to retrace some of those levels, maybe down to 11.5 or below in the S&P?
No, not too much more. We're still nothing more than usual. So we haven't tightened up or anything. Like we tightened up a little bit a few weeks back, but right now I'd say we're back for the most part to normal levels in our protection.
And Andrew, over at Acumen, what are you guys watching in your sea of 3D volatility spikes? What's been catching your eye of late?
Actually, it just not even the sea of volatility spikes. Just chatting with a friend of mine about potentially MMI and how that deal is going, and if maybe it's starting to possibly come apart a little bit with $40 cash, just as a sidelight, maybe a little perk of action on some of those lines in there. But and then this morning, watching just some telecommunication stocks on this positive, on this little Sienna pop. So just a little breath of life. I'm just seeing just small volatilities in Cisco starting to come down to lower levels again. So I'm just a little sector that might start to be breathing again. And like I said a couple of weeks ago, I am in general I am an eater of volatility, of option premium. So I like watching these sectors. As soon as the stocks start to lift a little bit, the volatilities come in. And I'm still not convinced we're in our market happy place yet. So keeping an eye on that is it's one of the few sectors that actually had some stocks that were up today in telecom. So keeping an eye on that volatility, and hopefully it can keep bleeding back in. I forgot to
mention to you before the show, but we don't mention Cisco on the show. It gives Uncle Mike the shakes.
Well, at this level, maybe you can start looking at. I don't know.
It's like his Vietnam. He has flashbacks.
Is that his?
That was his Waterloo. Let us say.
That was his Waterloo. Well, I'm a bottom feeder of most things, so I just see it here with a few of those other telecom names. So that's what makes me start to look at it.
Yeah, but indeed, there are a lot of names that are starting to look attractive at these levels. Ford got down around the 10 handle, got up to 11 recently, but it looks like it's broke back through that again. So maybe if it gets down to that 10 handle or below again, there's a lot of good opportunity out there. And a lot of names right now. People, as you said before, people are throwing the baby out with the bathwater in a lot of these major down markets, and it gives you a lot of time and a lot of opportunities to scoop some nice bargains if you're a premium buyer, or indeed hit some juicy premium if you're a degenerate premium seller at Cisco.
Exactly. So I like the combination of the two: stocks up, volatility coming in, people starting to get a little complacent again. Because eventually the volatility comes out, and that's, I think, an opportunity. You just got to wait till it happens. Basically, it doesn't happen every day, but you do have to wait. You got to be patient, even in Cisco. Sorry,
Cisco. Ow! Just pouring salt on the wound, sir.
Yeah, one thing, it got hot in the Midwest again today, so A lot of appetite again in the commodity options market, corn, beans, both of those areas. You had a bit of a pullback, but I think we're bumping up against 95 today in Chicago. And anytime you get that kind of weather, late August, early September, everybody starts talking crop reports. So saw some of that today. I have a son-in-law-to-be who works at the Cargill plant in Indiana. And Cargill runs, I know, 2 plants that process corn. And he was saying the other day that they try to run 24 hours a day, 7 days a week. And they've had shifts now where they've been short of corn. Hot weather today in the Midwest.
Yeah, corn, we mentioned on previous shows, is the new hot, sexy product, the new hot, sexy option. In fact, we just launched a new show recently with the CME, the long and short of futures options. And on our recent show, we had the ag guys on from the CME, and they were just, we dove into all the fun nuances of corn and how surprised everyone is that corn is the hot, sexy thing these days. But,
yeah, absolutely. You know, another story that hit late yesterday, it was on the online Wall Street Journal, and I don't know if any of you guys saw this, but I found it to be an interesting story. It was a story about a leaked Goldman Sachs recommendation to their hedge fund clients, and it was in the online journal yesterday, and it talked about the fact that, paraphrase what it said, Europe is going to be a problem, buy the Swiss franc, sell the euro dollar. And they showcased that as a recommendation they had made to their hedge fund client community. And I thought it was interesting that it came out after hours. Of course, Goldman didn't release it. It was a leaked report. But they were very bullish on the Swiss and very bearish long-term on the euro.
Interesting. Like I said, for our users out there, or for our listeners who are heavy in FX, might be a fun one to watch. We've been toying with doing an FX options type podcast as well, or a radio show as well. So maybe we'll save some of that for that program and for diving into those worlds as well. But I think that is going to do it for this episode of the Option Block. I want to thank all of my cavalcade of stars for joining me on the program today. And starting off with you, Uncle Mike Tosaw, what is coming up over at Know Your Options Inc. that you want our listeners to be aware of, sir?
Well, we're taking this weekend off for our weekly webinar, but on the night of September 11th, we are going to be talking about ratio spreads. So as an added hook, make sure you stop on by our webinar, and we'll talk about vertical ratio spreads, and we'll get into a lot of detail with charts and graphs and everything.
There you go. And you can also maybe get into your the diagonals that you alluded to on the program today that we didn't have time to discuss in more detail.
Absolutely.
All right. And Andrew, I want to thank you for coming on the program again. And what is going on in the world of Acumen that you want to let our listeners know about, sir?
Yes. Hopefully soon we'll be announcing a partnership with a OTC theoretical provider. Of course, that'll be top secret till it's actually announced, but that'll be the next bringing 3D to the world of over-the-counter derivative modeling. So we'll see how all that goes. But positive steps in that direction from Acumen.
Well, that'll be interesting. Any transparency that anyone can bring, any more insight or light anyone can bring to the OTC world is a good thing, I think.
That's what we're hoping. So we'll see. It looks very positive, though, so I'm very pleased with it.
I'd be curious to see what your software can do with some of these trades we're seeing going up in, let's say, the OTC variance and swap market and those kind of things, because there's interesting stuff to go on out there. I think your software would make some interesting spikes out of that stuff. Let's just say.
Yes, some good. I think people just want to see what the heck is going on. So that's generally what we try to get done as soon as possible.
And if our listeners don't know about Acumen, it is indeed a software that will essentially gives you almost a 3D topographical skyline type view of volatility across a number of different assets or sectors or classes, and it's pretty intriguing. Can be found at acumen.com, correct?
Yes.
In case you're not up on your Web 2.0 spelling, it is AQUMIN.com, not the traditional spelling of Acumen. So I encourage you to check it out and take a look at the offerings you have there. I know you have a retail product in the offering soon, I believe.
Yes, we do have an Excel product though that people can download, and they're actually starting to to use it, which is really cool. It just allows you to quote anything that you're usually looking at in spreadsheets in a much more dynamic fashion. It gives you a good sense of what's going on in the market. So essentially, you can look at 3,000 stocks at once instead of just 20. Just makes it a heck of a lot easier to see what's going on.
There you go. So listeners, head on over to AQUMIN.com and check out that Excel spreadsheet add-on, and you can have all the fun of Acumen on your very own desktop. And it is pretty fun to mess around with that software, I will tell you. And of last but certainly not least, Alex, what is obviously, aside from the party that you're chomping at the bit to get to, what else is coming up in the world of Options Express if you want to let our listeners know about?
Well, this is Jim Rosian. I am stepping in for Alex just now.
Oh, did he already? He already raced off to the party. He couldn't contain himself any longer. He had to go have a martini, didn't he?
He was serious. We're behind a glass wall. We could see several hundred people with glasses of champagne, people walking around with beers, eating food. And Alex and I are in this office together. It's almost like a cubicle. It's small, and everyone else is having a good time. And we're here. Actually, you know what? We're not missing anything. There's plenty of champagne out there. It'll continue, so we're not missing much.
I'll call Pete and tell him to reserve some glasses for you so that you guys won't feel left out.
Please do.
But what is coming up? Any interesting webinars or events you want to let our listeners know about?
Yes, September 10th, we will be in Seattle. We'll do a free workshop for our customers. We get several hundred customers to show up. Actually, we have a bunch of probably 20% non-customers come. You're introduced to the website. There's a platform tour. Takes about 3 hours. We have IBD, Investors Business Daily, joining us. They're going to give us their talk on looking for bullish ideas in 2011. We also have Joe Contes from Optionetics. He's going to be putting on an advanced strategy in the afternoon. And then I'll wind up doing Extend. That's our downloadable platform, and talking about OX Mobile. So lots of information. It's free to everyone. For beginners, intermediate, and advanced traders alike, there's something for everyone there, and it's free. That's September 10th in Seattle. It'll be up on the website, I think, next week. Denver is September 17th, and Washington, D.C. is September 24th, and October 1st is Houston. So actually, I'll be on the road, I think the next 11 weeks. Working with our customers.
So this will be your one and only appearance on the show then. Well, welcome, Jim, and goodbye.
Thank you very much.
Perfect timing. But that is going to do it for this episode of The Option Block, and I want to thank all of our listeners out there for downloading and streaming and subscribing to the program and making it such a hit. And we'll see you next time right here on The Option Block.
Become a part of The Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.